Well, a mixed day on Wall Street here with the S&P 500 ending the day fractionally lower. The Nasdaq as well. The Dow actually finishing the day higher. Volatility index hit a 4-month high as investors digest the latest in the U.S.-China trade battle. This as the government shutdown enters its third week. How should investors position amid all this uncertainty? Joining us exclusively, Mario Gabelli, Chairman and CEO of GAMCO Investors, right here on set. It's great to have you. Welcome.
Great to be here, Morgan. John, it's my privilege, and I love my favorite subject.
All right. There's a lot to get to with you, but first, just more broadly, I do want to get your thoughts on the markets as we trade right near record highs here.
Well, I'm not so sure I can give you a lot of insights into the daily activity. Friday, you know what happened. Retaliation. Monday, everything was nice. Today, we're still fluffing around. So those are the short-term dynamics tied to taxes, tariffs, and the other T, President Trump. And so those things are important. But over the next 3 to 4 years, what is the economy going to do? Globally, 180 pages came out this morning dealing with data on every country in the world and and they lifted the growth rate for the United States in real terms. So how are companies going to do? What is the impact of currency on their earnings? What is the cost of goods sold? Are the gross margins going to improve? What's the SG&A? And then you have profits. And I think they're going to be okay. And then on top of that, what you're going to have is the question of multiple. And you just heard the question of interest rates and confidence. So I'm okay. But then I look at the markets of $60 trillion in the United States, and I say $4 trillion, that is one stock. That's a lot. Netflix, will it double? Or will I find stocks in the sports world that will double over the next 5 years? And I think I can do a better job at that.
Okay. And I do want to dig into some of those names that you like here. But first, I mean, the fact that the market is so concentrated around this AI trade, do you see this as the beginning of the inflating of a bubble?
Well, you know, in 1410, I was a monk. And so, oh, you don't believe me, do you? I basically would scribe on yellow sheets of paper. And then this guy comes along called Gutenberg. And he created a revolution. And the AI is creating a revolution along the same lines. And we're just going to adjust. Under the free market system that we have with all the flaws, the rule of law with all the flaws, you know, we're going to adjust. And that's as simple as I believe in it. So we will figure out now, to the degree that you're going to put trillions of dollars into this, somebody's not going to make money.
Who do you think does make money? How would you? No, but I mean, how would you be investing as we see this AI infrastructure build out, especially when it touches so many different parts?
Great question.
Of the market.
Appropriate question. And so I want everyone here to buy one share of National Fuel and Gas located in Buffalo. There are 90 million shares, as simple as NFG. And what they did is 100 years ago, they bought 1 million acres of land between West Virginia and including New York, which has not been very hospitable. But they're in what they call down to the core of the earth. If they got acreage down to Marcellus, which is 10,000 feet, and then down to Utica, which is lower, they have the natural reserves of nat gas. So when you're talking about a stock that's selling at 85, buying back stock, probably increasing the dividend, and maybe subject to financial engineering. They have 750,000 gas customers. They may want to buy more, but they also can harvest that. So can you go down to the places down in the south to get nat gas? Are you going to get it in Marcellus to bring it to Connecticut? They're going to bring it to LNG ports that are developing. So they've got a fairly good dynamic there. So that's the one way we're playing it, among many others. Like Modine makes chillers for the equipment. There's a bunch of things.
Mario, what about the macroeconomic and even social consequences of this AI revolution? You're talking about the growth rate for the U.S. projected up, but at the same time, we've got this great bifurcation between the wealthy and the working class.
Well, that's totally unrelated.
Well, but I want to set that up in the sense that AI threatens at least to put pressure on the entry level of white-collar work. So one might extrapolate that even if the growth rate overall rises, maybe the distribution of benefit across the economy isn't what it used to be because of what's happening with AI. And, hey, you can see it happening in stocks in the market, right?
Yeah, but you could have made that argument when they first came in with the, what's that guy's name? Eisenhower built up the interstate highway. You could have made that argument when other things happened over the years. From my point of view, when I lecture to students, I tell them the great challenge is their focus and their intensity of coming up with ways to create wealth for themselves and create options. And I got to tell you, that resonates with them. Are they concerned about it? Sure, because they hear headlines like the one you just said about job losses and job creation. So what? Be flexible. Darwin said it's not the strongest that survive. It's not the smartest. It's the ones that are also most flexible. Like, you're going to be like Darwin. You'll survive.
Okay.